So, Corey, you put out a couple stories over the weekend and today. The first of which highlighted the fact that SpaceX took 74 days to go public from the time that it filed its confidential prospectus to when it actually listed. 74 days. Put that into context for us. Is that fast?
That was the fastest that I could find among a large tech IPO, which is notable just given how large and complicated this deal was. So a typical IPO takes anywhere from 3 to 4 months from confidential filing to actual listing date. SpaceX took about 2.5, 74 days in total from actually going from confidential filing to the IPO date, and so this was rapid fire.
And why was it so fast?
There's two legs of the journey for an IPO, essentially two primary legs. One is the period where the company is getting comments back from regulators after they submit their filing. That's usually weeks, potentially even months. That was very fast for SpaceX. And then there's the period where the company is meeting with investors, explaining the deal, explaining the company on the roadshow. That usually takes at least a couple weeks. SpaceX shaves some time off of that. So you have this combination of sort of these two legs of the journey, them shaving off a good chunk of it from each.
Okay. I wonder, as you think about the speed at all. I mean, how much of this is the current administration that we're in? You talked a little bit about it in the story. I mean, they seem to want to expedite things, want to get these companies out to market. What do you make of that?
Yeah, this administration is definitely trying to essentially focus on capital formation for the equity capital markets, and these IPOs are a big part of that. So that first leg of the IPO journey that I talked about, that kind of regulatory piece of it. Yeah, I think there's essentially a mandate within the SEC to, sort of not hammer companies over the head with comments about, what did you mean, when you disclose this deal, or what did you mean by this term or whatever. So, that is definitely a piece of it. And I think that's going to be an important cue for other companies coming down the pike that are considering IPOs, that like, hey, we might have a kind of easier time with the SEC than we otherwise would.
And we don't know right now what comments the SEC gave to SpaceX. That'll all come out in the next couple weeks, right?
Yeah, most likely the next couple of weeks. There's a process where all the comment letters are kind of go back and forth between the companies and the SEC. That is unveiled usually a few weeks after a company's IPO.
Okay. So you talked about now the what this queues up for other companies looking to go public, like OpenAI and Anthropic. And you talked about how short a time span this was. So what's your read on things here? Are OpenAI and Anthropic, are they uh, looking to be, later this summer IPOs? Are they rushing for the gates? Do they want to take advantage of this window? What do you think?
Uh, Both companies confidentially filed earlier this month, and if they essentially are able to match SpaceX's timeline, that would put them each sort of on target to go public as soon as mid to late August, which so just cancel your summer plans, all you IPO watchers. It could be really fat. Like I'm scrambling. Like what am I gonna do?
Canceled all your vacation because the
Yeah,
time
no,
74
exactly.
days takes you to August.
No, it's scary. That was part of this exercise was, selfishly wanting to plan my year. Um, no, I mean, so August, IPOs like never happen in August, just as a caveat. I mean, who knows? Maybe these companies will be different because, they can do whatever they want. They can raise more money than God. Um, but essentially does set the SpaceX deal does set the pace, and I think OpenAI specifically has said, look, we don't need we might not go public immediately. So obviously the companies give themselves some wiggle room. You don't have to go public. You don't have to, you can start the process with the SEC and then wait a little bit. So with that caveat aside, still these companies might want to take advantage of a very, sort of clear market window where public investors are very much willing to fund top AI companies.
Okay, so whenever it does happen, the other story that you published this week looked at when OpenAI and Anthropic, but when OpenAI goes public, what are the nuances that the SEC could have to grapple with and pay attention to? Walk us through some of the complexities here with OpenAI and what we could and couldn't shouldn't expect to see in the filings whenever they become public.
Yeah, so if you recall, we published a story last week, sort of unveiling some of OpenAI's financials from the first quarter, and we've reviewed some of those statements and sort of want to anticipate what the public is going to see when this confidential IPO filing drops, in a matter of months or weeks. And I think, we've had this kind of at least 2-year long conversation about these sort of web of deals that OpenAI has done with their own investors as they've like sort of really raced to amass as much compute and data center capacity as possible. They've done all these deals with Microsoft, with Nvidia, with they've done leases with CoreWeave and Oracle, and so they have these like hundreds of billions of dollars worth of compute commitments that has been talked about ad nauseum. What was striking to me, looking at these financial statements, is just how light OpenAI's balance sheet is, which is usually the place where you would expect to see, sort of debt, capital expenditures, anything related to commitments or hardware or anything they're on the hook for. The reality is, when people look at OpenAI's balance sheet, they're going to see very little debt, they're going to see very little lease liability, and essentially what that means for the IPO process is OpenAI is going to have to explain what these purchase commitments look like elsewhere in the filing. This all follows accounting rules, but I think investors are going to have to be a little bit more sophisticated in OpenAI's case to kind of understand, okay, what are they actually on the hook for? Because it's not going to be on the balance sheet.
So, for people who haven't spent as much time reading the disclosures that are associated with balance sheets, why is it that all of these multi-billion-dollar purchasing commitments don't show up in the balance sheet at all? I mean, what's the rationale here?
I mean, it is I should definitely say it's standard accounting. They're following accounting rules from what I could tell. And but it ties back to, is this actually a deal where you own and operate or control or have taken actual operation of the data center? Like, then it will hit the balance sheet. But these kind of future commitments are all going to be piled into other parts of the S1 filing. There's a section called commitments and contingencies, where a lot of off-balance sheet leases sit. There's other sections where it could fit. So basically, we haven't seen the S1 yet, but what I'm trying to just sort of like lay out for people is, sort of these commitments, which are, as of the end of last year, stood at over $650 billion worth in the coming years. Yeah, you're gonna have to like look a little bit more to kind of see where those might be and whether they're spelled out.
Right. Now, the other thing that you laid out here is you laid out there would be a lot of considerations around the warrants because of the valuation size. Can you talk about that a bit?
Yeah, the other kind of quirk of OpenAI's financials are in its income statement, where one of the largest sort of line items that hit its bottom line is this huge expense related to warrant charges. You know, Going back to, obviously this restructuring deal OpenAI did to ensure that it would, sort of get out from the original nonprofit structure that guided it in its early days. It created the separate nonprofit that has a stake in OpenAI. And so that's essentially a related party deal where there's going to be this expense charge that you're going to see that's very large related to OpenAI's rising valuation. Those warrants can be difficult to value value. Oftentimes, that's just like sometimes investors just ignore it. It's a non-cash charge. Who cares about it? But otherwise, people might want to understand it.
So, I mean, taking all this together, Corey, you've got this company that will go public. Their financial statements, they're not hiding anything. It's just you have to look a little deeper to get the full picture. I mean, as you think about this from an investor perspective, um, does it make it a riskier investment? I'm also thinking about the tentative nature of these deals. If they're not on the balance sheet, then are they more likely to change, therefore adding to the unpredictability of the nature of the business? Like, what does all this tell you about the state of the company?
I mean, I think I'm hoping that there will be a lot of disclosure around different contracts that OpenAI has signed, so that if I mean, this is one of the most important IPOs ever. I think investors will want to get a handle on where the risk actually lies and where OpenAI is on the hook to pay, even if demand sort of shrivels up. I think that's going to be an ongoing storyline. At the same time, like, as we saw with this SpaceX IPO and sort of how fast they got through the ringer with both the SEC and with investors, like, let's be real, like, this is at least a market period right now where people aren't necessarily asking all the tough questions that they should be. And so, will the fundamental investor who's like really digging through all these filings, like, be the one who looks smartest in the end? I don't know, but I do think, like, what I generally believe is that we all benefit from more disclosure from companies, and that's why we do what we do as journalists, and so I would think investors would want the same thing.
And I should say, I mean, we're talking a lot about OpenAI here, but you do point out in the story that Anthropic is in very much a similar situation. Although I don't know, it feels like my read on it is they've they haven't it's no smaller a company, but it seems like they've done less or proportionally less of these confusing deals.
Well, I think, like, yeah, I mean, I think the shorthand, for these companies is like, OpenAI has been much more aggressive in amassing sort of future data center capacity than Anthropic has, and that's why you saw them sort of sort of struggling with keeping up with demand as their demand spiked this year. But yeah, they've started doing kind of SPV deals, lease deals, and their deals are getting more complicated as well, just because they need to amass more compute.
Right. Great. Well, Corey, I want to thank you for coming on. That is Cory Weinberg, our senior reporter here at The Information.